Good afternoon and welcome to Biztech Asian Midday Marketwatch. Our guest today is Jeffrey Halley, Senior Market Analyst, Asia Pacific at Awanda. Jeff, as always, thanks for coming on the show.
Always a pleasure, Brian.
Now, Jeff, before we get your insights, let's first take a look at how crypto markets are performing, and then we'll take a look at how regional stock markets are performing. Now, we'll start with Bitcoin, which is 62,444. It's up 0.1%. Ethereum is at 3,819.12. It's down 1.19%. If we look at regional markets, we've got the Nikkei, which is at 29,205.46. It's up 0.62%. The Shanghai Composite is at 3,593.23. It's up 0.7%. The Hang Seng is at 25,708.52. It's up sharply 1.18%. The ASX 200 is at 7,385.5. It's up 0.06%. The Kospi is up 0.73% at 3,028.73. Closer to home, we've got Bursa Malaysia, which is at 1,605.97. It's up 0.48%. And rounding up the numbers, we've got the SGX, which is at 3,189.26. It's up 0.49%. Jeff, it's overall a sea of green across the region. Tell us why.
Yeah, look, we had a very positive session on Wall Street overnight. The inflation perceptions there seem to have swung back towards it being short-term again, and that's evidenced by the shorter end of the US yield curve rising, whereas the longer end of the yield curve flattened, so yields fell slightly. So that whole curve is flattening. That implies that the market for now believes that the longer term inflation outlook is under control by the Federal Reserve. We'll have to see how that one plays out, of course. In an absence of really any other headlines today that we've seen across Asia, and we really only have the Bank of Indonesia policy meeting on the calendar today, that's green lighted a move, a positive day in equities, notably in North Asia. So in recent times, we've seen ASEAN markets perhaps being a bit more defensive for regional investors. What we've seen today is a rotation out of that side of the market and back into the North Asia heavyweights, mainland China, Hong Kong, Shanghai, Tokyo, and of course, Taipei.
Now, one bit of news we got out of the region is the minutes from the RBA October monetary policy meeting released this morning showed that the Reserve Bank of Australia is expecting the Australian economy to return to growth in the December quarter and to its pre-Delta path in the second half of 2022. Now, is it time for the Aussies to do cartwheels, and what does this signal to the rest of Asia?
Yeah, there's a few stories running around in Asia today, particularly from some of the larger banks with their research side of the equation. And they're generally saying, if we look at the RBA, that the RBA may be about to change its guidance from ultra easy monetary policy because of the recovery to perhaps a more neutral setting. Similarly, in New Zealand, there's a lot of talk that the RBNZ is going to go 0.5% instead of 1/4 next month because of those huge inflation numbers we saw yesterday. Obviously, in the UK, for example, we're seeing rate hikes as early as November being priced in there very aggressively. And even in Europe now, they're starting to mumble more about the ECB moving towards a more neutral stance. I think this explains a lot of the reasons why the US dollar has fallen today, because this is offsetting some of the taper expectations. But as we can see, the Aussie and the Kiwi are up over 0.5% today. We're seeing Asian markets, Asian currencies rallying as well. And I think it's a combination of all these effects that have caused the weaker dollar and the rally in the Aussie and the Kiwi and most of the Asian currencies.
Now, Jeff, there's been a lot of talk about the supply chain disruptions globally. Could you give us a sense of what are the actual supply chain disruptions that are happening and how that is impacting growth globally?
Well, I'm not sure it's really impacting growth at the moment. I think what it's doing is impacting pricing, and we're starting to see inflationary pressures force through everywhere. Now, a lot of central banks are still banging the transitory drum, but it comes down to, is 2 or 3 years of high inflation transitory or half an economic cycle? I'm sort of more to the latter myself, but if we want anecdotal, evidence. I have some friends here who have just bought a brand new, modest, mass-produced car, and it arrived 6 months late, and they got their third choice of colour. I'm doing some work down in New Zealand on my house down there, and the wood prices have nearly doubled from what they were this time last year, and it's a 4-month delay minimum to get the wood. And last time I saw, New Zealand wasn't short of wood. So if we take these little anecdotal examples such as this, we can see how these stresses are moving through supply chains all over the world. And we're still coming up to the peak Northern Hemisphere shopping season. So I don't know if it's going to be a very Merry Christmas at this stage. I'm not saying that it's really weakening growth. It is certainly taking the edge off that predicted post-pandemic recovery, no doubt about it. But I think what we're really seeing is stresses coming through in prices. Now, if this energy crunch gets worse in the Northern Hemisphere, across Northern Asia and Europe, that may complicate the situation.
Now, Jeff, what are your thoughts on key events and data points this week that will move markets?
Well, we've got the loan prime rates, rate decisions out of China tomorrow. Now, I'm not expecting them to really to move on the rates, but I do think the odds are increasing very much so of a triple R cut by cutting the reserve ratios that the banks have to hold, which would be a strong positive sign for local equities, because the banks would have more to lend, yada, yada, more economic growth. We had the Bank of Indonesia this afternoon. I think they will remain unchanged. Their inflation targets are in a good place at the moment, and they will also be riding the commodity boom at the moment. But really, it's a pretty light data calendar this week. And I think what we're going to see is at least 5 Federal Reserve speakers tonight, and we're going to see these ongoing slews of US earnings. Now, what will be key in those US earnings will be their 2022 outlooks. Are they going to be mollified because of the conditions that we were just talking about? And really, whether the Fed speakers are all moving behind this November Fed taper. We've seen a lot of them fairly obviously in that camp. Are we going to see more of them reinforcing that message? So that we're really starting to look at a world now where maybe interest rates have actually generally hit their lows and they're going to start rising. What is the implication for that for equity markets, for example, into 2022?
Now, Jeff, thank you very much as always for your insights.
Always a pleasure.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at Awanda on Biztech's Asian Midday Marketwatch. I'm Brian Fernandez. This video will be on our various social media platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.